Yeah, hi, Darren Gordon here, Managing Director of Centaurus Metals, ASX listed, looking to develop the Jaguar Nickel Sulphide Project in the Carajás Mineral Province of northern Brazil.
Darren, welcome aboard. Good to have you on here. No relation, of course. Need to point that out to folks, just in case. No nepotism.
Nothing, no nepotism there. Thanks for having me. Really good to be here.
I'm glad you're here because I think nickel's obviously very hot at the moment. I think there's very few good nickel projects. We had a look at you a few months ago. Yeah, I think we first heard about you during the sort of MetSox sort of nickel conference as well. And I think, since I've been following you closely. So today, I think we're just going to maybe help you introduce us to your story better in your own words. So I'm intrigued in a few things, and I'd like to kind of go through, obviously, the team, the business model strategy, and how you're going to be able to deliver that. So if you don't mind, we'll treat today as a sort of an awareness program, and then perhaps you come back on, we can
absolutely
deep dive, okay? So that's setting the tone for anyone watching this. Right, so tell us a bit about you. What's your background?
Yeah, look, I'm a bean counter by training, sort of chartered accountant. Spent many years auditing resource companies, transitioned into the CFO roles of ASX-listed mining companies, further transition into mining companies and doing what we're doing today. It's, I guess, if you go back 10, 12 years now, I sort of came in, took control of a listed shell, went looking for assets, found some assets in Brazil in iron ore, and that was really the start of the journey that we're on right now. And I guess the last couple of years have seen us transition into this nickel sulphide project, and really glad to be part of that now.
So what happened with the iron ore projects?
Still got it. So it was picked up 2010, we licensed it. I guess even going back, we drilled it all out, resources, reserves, mining leases granted, environmental licenses in place. Still have that asset today, but really just hit the headwinds of the iron ore price sort of around 2014, 15, didn't quite get it developed in time. So, obviously the market where it is now, it's still a valuable asset to us, but we need to sort of do some things to unlock the value. But I believe that all of that work that we did there has put us in a position to be able to have moved through and been able to pick up the Jaguar project from Vale a couple of years ago.
Right. So you mean in the sense of it's taught you how to do business in Brazil? Is that what you're saying?
Yeah, partly that. I mean, obviously, Brazil is something where you need to know the ropes. There's a few companies there that are doing that. We've been there now 12 odd years. We think we know what we're about. The core team that we've got is still with us from 2010, so that's been really good. But I guess importantly, doing a deal with Vale, you sort of need to know, or they need to know, that you are capable. And the deal structure that we put together with them was very low front-ended cash, deferred payment structures, but principally a royalty stream coming out of the project. So, it's not worth anything to them if we don't sort of get the project up and running. And I guess our credentials that we had previously with the iron ore gave us a big sort of runway into being able to do a deal with them on the nickel project.
Okay, gotcha. So the iron ore project, as it stands, parked up, does it have any value on your balance sheet? Does it have any value in the market?
I don't believe it has a lot of value in the market. When you look at it on an NPV basis, it's probably got $250 million value at the moment. So there's some work to be done. But yeah, on the balance sheet, it's probably carried at $2 or $3 million, I think.
Okay.
Nothing substantial.
And would you look to offload that, or are you going to keep it, park it up for?
We're investigating a few things at the moment. That's certainly one of them. Potentially looking at partners coming into that to develop it. Obviously, our focus now is really on the nickel, so we're just trying to find ways to realise value out of the asset, which, as I said, we still believe has a lot of value to us.
Okay, interesting. Okay, well, let's talk about nickel today, because that's the interesting thing, that the market's doing its thing, and I think people are trying to understand where the next big economic mine is going to come from, and how it gets into production. So start with the, if you don't mind, the thought that you had when entering discussions with Vale. How much did you know about what you were trying to acquire at the time?
Look, I guess we probably had more knowledge of that asset than anyone else on the ASX. I mean, if they if they had the knowledge, it probably would have been gone a long time ago. It was basically incubated within the Vale portfolio. Again, it's because of our exploration manager, our geologist on the ground that was aware that this asset was where it was. We were already working some other exploration plays in the Carajás province, so we knew about it. We didn't know whether it was going to be accessible or not, but we put a pitch to Vale, which at the time they were amenable to. And as I said, fortuitously, we've been able to work through and get that deal done. It's a little bit of a sliding doors moment because, you don't get that. You get to this market and where it is, and they're probably not doing a deal on that today simply because of where it is and the leverage that it might have. But I think fundamentally it was an asset that was too small for them and their development plans and, the way that they need to allocate capital. They hadn't really worked the asset since 2010 as the last time they put a drill hole into it. But, it's coming with 55,000 metres of diamond core, pretty extensive database of information. So it sort of has allowed us to elevate from looking at sort of grassroots, more exploration type plays into something that's a little bit more advanced and something that we can really get our teeth stuck into. And I think over the last couple of years, we've been able to show that.
Okay, tell me about the deal itself. I mean, do you owe any more payments on it?
Yeah, no, we do. So the upfront payment was only $250,000 US, and in conjunction with that, we swapped out some of our a grassroots copper gold asset quite close to their Salobo mine. So it was a package of ground that sort of, I guess, completed their base in and around Salobo. We've got to pay them another 1.75 million sort of going through into BFS activity, and then we pay them $5 million on first production or commercial production, plus the royalty. So a really good deal for us, one that, hadn't had to pay a lot up front. Those are the really good deals, and Vale have been really great to deal with. Sometimes people push back a lot on big companies and the way they go about it. I guess once they made the decision that they were prepared to move on asset and do something with it, they've been really professional and really supportive of how we're going about it.
It's a really good deal, by the sounds of it. There and well done. But when you kind of walked into that deal, obviously you were looking for a new story to load into the company, right? Because the iron ore thing, timing was wrong. You needed a new story. It was a case of any story will do. We've got to keep this thing alive. Or was it like, no, this is the best choice available to us? I mean, honestly, when you look back,
I think it's a little bit of both. The asset that we swapped out was pretty prospective copper gold IOCG opportunity, but it was early stages. So, we would have had to raise more money in the market. It would be a lot more speculative in nature, tough location where it was. So, I guess on the other side of that is, we like nickel as a concept, particularly nickel sulphides. We've got some guys in our team that have worked in nickel sulphide before. They've seen the opportunities when nickel runs really hard and the leverage that you get in the market to those sort of things. So there's not many nickel sulphide assets in Brazil. The only other one really operating there right now is the Centaurus stuff that Appian now have, that Mirabella had previously. But it's to get hold of a nickel sulphide asset, I think was a goal, but we didn't know whether we were going to be able to achieve it or not. And thankfully we did.
I mean, you say that, but if I look back 2 years ago, there was no sign of any super cycle happening anytime soon. I mean, these are cycles. It's probably inevitable there will be one, but so you kind of went early on that one. So you must have bought into the whole green thematic, battery metal thematic.
No, I don't think it was as specific as that. It was more the fact that we saw Jaguar in what it delivered to us from where we were as a really, really good opportunity. So advanced drill core, leveraging our position where we had in some of these other assets. We like the base metals. We like the Carajás Mineral Province. We got knowledge in nickel. So it was really something that we wanted to pursue with vigor. Obviously, no one could look in their crystal ball and go, nickel's going to go the way that it has. So, that side of it is fortuitous. But I always believe that, we know that base metals have cycles, and it was just a good time to be getting into a cycle that might be copper or it might be nickel. But, this was an asset that had all the right attributes with it for a junior company like ourselves to be able to sort of get in and really get our teeth stuck into.
Yeah, I mean, look, you're 340 million market cap today from I say very, very low base. So this I'm just sort of digging in a little bit to try and understand, how much is planning, how much is luck, how much is timing, all of that. Because in hindsight, from the position you are, that's an okay conversation to have. If you've made a bunch of decisions and nothing had changed, then it'd be a very, very different conversation, I suspect. But so
I would characterize it. It wasn't planning to say I've got to be going into nickel. It was about planning to say I want to go into a more advanced asset. We want to be in Brazil. We want to be in the Carajás Mineral Province because that is the most prolific mineral belt in Brazil, particularly for base metals. So we had a disposition to base metals because of the earlier stage projects that we had. But, there's definitely a degree of luck to it. I make no doubt. I think a lot of the things in resources, it's all about a bit of luck on your side and timing. So, I think we've been fortunate on both of that front.
Yeah, take a lucky general, I think Napoleon once said. So to give people sort of sense of some of the numbers around what we're talking about here, because I want to talk about some of these deliverables that you've got coming down the line and a little bit about the market if we can, but just give us the headline numbers.
Yeah, so look, the last couple of years we've been doing a lot of drilling of our own. We've probably drilled out now another 45,000 metres of drilling of our own on top of the 55,000 metres that Vale had already put into the project. We put out a couple of resources. So the last resource we did was in March this year. That's now at 59 million tonnes, 0.96% nickel, 560,000 tonnes of contained nickel metal. So it's it is a globally significant resource in the scheme of undeveloped nickel sulphide stories. What we've then done with that resource, we've run a base case for production of a traditional nickel concentrate. We delivered that at the end of March. We did a value-added study, which was looking at the production of nickel sulfate. We delivered that at the end of May. And really the numbers coming out of that are, pretty compelling. I think it's, $1.1 billion post-tax NPV, payback in less than 2 years, IRR over 50%. And doing all that off $7.50 a pound nickel with a 50 cent per pound sulfate premium. So all of those, all of the assumptions that we've put into the scoping study are, in our view, pretty conservative. And we already see the upside of that with the nickel prices where they are. So good project.
Well, as it turns out, it is a good project. But it's amazing that I'm intrigued about the work that you've had done. So I want to talk about the team, if we can, in terms of what they've actually done. Because when people go, "Oh, we picked up a project from BHP, from Rio, from Vale, whomever," right? There's an assumption it'll easy breezy. It's going to be a good project for a junior company to get involved with. But I mean, was it an easy path to get to where you are today? I mean, where were the bumps? What were the things you had to overcome?
Yeah, look, to be honest, it actually has been pretty smooth sailing. And I say that touch wood, because, at any point in time, things can get off the rails if you don't manage it properly. But it was extensive amount of drilling. The database was there. There'd already been a lot of work done. It just didn't meet the size factor that Vale really needed. What we saw is that there's a lot of, they sort of, like they always do, everything's going to be bulked out, moving a lot of dirt, all that sort of thing. And for us, we saw that there was a number of high-grade intercepts in their drilling, but it was all on 100-metre space drilling. So for us, it's about closing in that drilling, I guess initially proving that the continuity of that mineralisation is there, and we were able to do that. We've now been able to expand upon that. But honestly, I believe, the work that we've done in Brazil previously and the team that we've already had in place who knows how to operate in Brazil has given us a big head start. It wasn't like I'm saying, okay, I'm picking up an asset in Brazil. I've got a team in Australia and they've got to go and work out how to operate in Brazil. We haven't been able to, in Australia, we haven't been able to go to Brazil for 18 months. You do your 2 weeks quarantine coming back or whatever it's going to be. So it's been really tough. But we've had a fantastic team on the ground, and that's led by one of our directors, Bruno Scarpelli, country manager, has been with us since 2010. Again, our GM of exploration, he's been with us since 2010, lived in Brazil for 12 years, worked in Mirabella, so knows nickel, knows Brazil. So those are the sort of guys that are key to our group. to be able to make all of this happen. Our exploration manager that's now based up on site in the field, he's been with us since 2012. And, this is in a time where obviously markets have come off, but right now it's a pretty hot market. And, our people are pretty loyal to us because we've got good projects. So, I think having that team together has allowed us to do what we need to do in a relatively systematic manner because we know what we're doing and we've done it before on a previous project.
So, but what happens now? Obviously, look, you've got a few more things to deliver and we'll talk about it in a second, but I think now's the perfect time to talk about, single jurisdiction risk, single country risk, single asset risk. I mean, given what you're seeing in the marketplace and maybe given your track record, what do you do about that? Do you try and find other nickel projects? Do you look at other types of commodities as well, whether it be in country or outside of country? I mean, what's your thinking? You're the CEO.
Yeah, look, I understand that there is risk associated with that, but there's a practicality to that as well where, you can't get ahead of yourself, right? So, that all costs dollars. You've got to be able to you've got to also be able to show that you can deliver on the project that you're talking about. So this is a relatively advanced project. It's got a lot of drilling. It's got a lot of work to do. But, I'd like to make sure that we actually get this one right first. And, if we get this one right, then, the world is our oyster because the cash flows that this thing spins off is enormous. And it also opens up to, if we get it right and Vale are happy because they're starting to see a royalty stream come through, well, therein lies further opportunity to do other things on things that might be too small for them. Now, they're not saying that to us directly, but therein lies the opportunity. They're still the biggest tenement holder in Brazil. And if you want to get a good project, generally they've got hold of them.
So that's the carrot, potentially. But conversations yet to start.
The reality is we actually have got diversification through the fact of having the iron ore and the nickel. Now, they don't naturally go together, right? But there is some level of diversification already in our portfolio. But I would still characterise to you that it actually makes sense for us to do the one project, wear that risk, manage that risk, get that right first before we start thinking about where do we go next. There's a number of companies that will grow, look to grow very quickly. I'd like to make sure we bed this thing down first and show that we're doing a good job on this one.
Yeah, exactly. Because I think what you're also going to have to show is scale. It depends what your end game is. Have you got a clear sort of end game at the moment, or is it just let's get the DFS over the line and get into production?
Yeah, look, it's definitely a push towards production. Yes, it's about delivering the DFS, but it's as I said, it's about getting that up and running in the shortest possible time, getting through the approvals processes. We know that those things, take some time. We feel like we've got the right people to manage all that, but it is about getting it into production, and then we can have a think about what we do next.
It's just again, as an investor, I'm kind of trying to work out what your end game is, because it gives me a sense of what the potential is, and therefore what you then do with it, because it was too small for Vale. Do you think that you've got the ability to prove that perhaps it does have the scale where a Vale, a BHP, we see them trotting up to Toronto, and others are looking for long-term, multi-cycle, large-scale nickel sulphide projects? What's your intent?
Yeah, this project has definitely got scale about it. It's a 13-year mine life at the moment, 20,000 tonnes a year. If we're 20,000 tonnes a year, we're going to be top 10 in the sulphide space. And I think that's pretty substantial. It's got the ability to grow. We're doing a lot of exploration at the moment. We really haven't tapped the underground potential greatly. Most of the mineralisation in that resource is still open pittable, which again is making it quite unique in its own right at the grades that we're sort of talking about. So I think we actually are fortunate to have this asset that, one, is it's on a path to production, generate the cash flow, look to be able to do other things with that, but it's also that it's already got huge ability to deliver more nickel sulphide mineralisation as we drill deeper and as we step out further. So it's a development play, but concurrently, it's also probably one of the most prospective exploration plays that we would like to think that you could look at.
Right. Okay. So again, just asking the question, because for sort of either novice investors or for people who don't understand, how the nickel market works, or how you intend to kind of Because look, from March 2020, you're up 9-10 times, right? Great. No one can argue with that, right? But when you get up here, it gets harder. That growth story gets harder,
Absolutely.
right?
Yep.
So you've got to, you're starting from a much higher base. You've got to show and tell the market how that growth story continues. And that's, we'll get into production. We'll throw off some cash. We've got really high grades. So payback in less than 2 years, 1.8 years. It's great. So we'll either build up a cash reserve here and we'll start whacking out dividends. We're able to pay a royalty off to Vale, etc. It's all good, but then the kind of so what factor comes in. So what do you do next? What do you do with your cash? Can you deliver that scale? Can 13 years life of mine become 20 years life of mine? Can you hit multi-cycle type scale?
Yep.
Or do you go off and do you start looking at other acquisitions? Because that's the tough bit here. When you've been so successful so quickly, you've got to keep doing it.
Yeah, look, I think we've come off such a low base when we went into this asset. Like the market cap was probably 25-30 million bucks when we first did the deal. And we understand that we've had, success of where it is, but I still think that our market cap is only a small reflection of the true value of this project. And simply through the cash that it's going to throw off. I mean, you're talking, 250 million Aussie dollars a year, do that for 13 years. But, to your point about, can it grow? Absolutely, it can grow. At the moment, in the scoping study, the stope optimizations in the underground. So we've got 8 pits and 4 undergrounds. Undergrounds coming in under those pits. Those undergrounds are limited by the resource, and the limitation in the resource is limited by the drilling. So, we've drilled down to a certain depth. That's allowed us to take the resource to that depth. That in turn means that the stopes can only go to the limit of the resource. And that's probably around 250, 300 metres currently. We're now at a position where we've got the rigs out there. We're able to step out, 50, 100 metres. And if we continue to hit the mineralisation where we expect it to be, and there's a lot of exploration tools that are, giving us a good guide of where we need to go. But that mineralisation does grow a lot. It means the underground grows a lot. There's further work on the regional part of this tenement, which, wasn't ever looked at by Vale. So I'm very comfortable that this will be a 20-year plus project, going to be spinning off that sort of cash flow over a long period of time. And then that gives you that flexibility. Okay, well, do I go and buy other things once I'm into this? Do I look to expand out around it? Do I go and talk to Vale about whether I can get access to some of their other projects? All of those sort of things come into play once you've actually, start generating that cash. And, that opens up, in my view, a world of opportunity as to which path that you take. Yeah,
absolutely. And we're not talking too far away. I mean, obviously, if we look at where you are today, we've got a resource update coming through. Is that right? When's that due?
Yeah, absolutely. Yeah, so resource update by the end of the year. And then we'll target another one probably third quarter next year, which will be the resource, which will go into the definitive feasibility study and, be the one that we base our reserve base off. So there's, I think we've got 7 diamond rigs and an RC rig at the moment. We've got another diamond rig coming. That work will get split between step-out type drilling to expand, under the existing stopes, but also looking to infill, making sure that all of that resource that we've got is in the indicated measured category so that we can bring that into reserves when we release the DFS.
And so how's the cash position in terms of being able to do all of this drilling, infill and expansion drilling?
Yeah, so we were sitting on about 20 mil at the end of June quarter, probably burning about $1 million a month, something like that on drilling at the moment. So we're still well placed for what we need to do. We continue on with that work. We've got optimization, trade-off work going on inside, around mine. What are we going to do? Where are we going to start? Starter pits, cutbacks, having a look at the cost structures. There's a whole raft of optimization type works going on now. That'll carry on to the end of this year and sort of probably the first couple of months of next year. And so I think with the funding we've got and everything that we need to do, we're really well placed to get through all of that work. we're not silly about this. At some point in time next year, we'll need to come back and look to raise to get us through to the completion of the definitive feasibility study work. But I think there's a lot of value to be added before we get to that point.
Okay. And in terms of the market at the moment, we see a lot of companies coming on here and trying to align themselves or associate themselves in some vague way with the automotive industry and, in that whole green thematic. You seem somewhat more pragmatic about your approach, which is getting on with the business of building the business. So what's your take on the market and what you're seeing, whether it be with other peers or whether it be the way that the market's being discussed with funds, etc.?
We are about just getting on and building the project. There's no doubt about that. I guess if you go back to the deal that we did with Vale, part of that deal was that they have rights to the offtake. So no matter what that product is, they'll have rights to that product, which is good and bad. It sort of limits your market. The traders might not like you as much as what other companies have, but at the same time, from our point of view, we know that Vale's there at arm's length market-based pricing to buy the product. So that side of it is really good. For me, internally, we're very comfortable about pushing down the path to produce a sulfate rather than going down the concentrate path. There's a number of reasons for that. The payability on nickel, in a concentrate is what it is, and it's pretty poor, to be quite honest, relative to other commodities. But I think that's a nature of the changing market. Like 2 or 3 years ago, there wasn't a battery industry that was really being talked about. There wasn't the need to produce a sulfate. So, what you've got now is a sulphide project that has got the ability to produce sulfate, which historically everyone would have said just produce the concentrate and sell it into smelters in Canada. So for us, it's a new market, one that we like. The fact is there's cheap power in Brazil. There's plenty of people. There's water. There's limestone for neutralisation. So on the cost side of it, it's doable. On the revenue side, you close that payability discount that you're going to get, plus giving yourself opportunity to tap into a sulfate premium. So if I was trying to do this project in Australia with the resource I've got, the power consumption might actually do away with a number of those benefits that you get on the revenue side. So, it's quite a unique thing that, Brazil is 80% renewables, principally coming from hydro sources. It's relatively cheap. We're probably under 10 cents a kilowatt hour for our power. So all of those things go into say, okay, not only do I get the revenue benefit, I'm not actually getting whacked on the cost side of it to achieve the same thing. So we just look at it as much as anything on economics. I mean, that's coming from a finance background. That's really what you want to do. At the end of the day, you want to make the most money for your shareholders. And, we think that by taking the path that we're on, we're well positioned to do that.
It's interesting. So we've got this weekly battery metals show, which we have on cruxinvestor.com, and we talk a lot about nickel each week. And this kind of greenification of a lot of the stories. People feel the need to be talking about sequestration and zero carbon and any way that they can green the story, because that's what automotive manufacturers, or the OEMs, are going to demand of their commodity supply, right? So it's natural. But with obviously, do you feel that in some way the deal with Vale has maybe negated your ability, and maybe it's with hindsight, it's easy to say, has it negated your ability to maybe fetch a premium for your product because you're tied in? I assume that's 100% option that they've got. Yeah,
no, there's definitely a right that they have. I don't think it diminishes anything at all, because the premise of our deal was always around arm's length pricing. So, we choose the product. They've got to decide whether they want the product. If they want the product, it's arm's length pricing. Yes, we've still got to work through that.
What's arm's length mean? As in they have the right to match, right, first refusal? I mean, what are you talking about?
Yeah. I mean, in effect, I can go out to a battery maker. I can go out to a car manufacturer. I could go and enter into some sort of strategic supply arrangement. They've got to have a look at what that is. But the good thing, I guess, if you're going down the sulfate path, is it's LME plus a premium. So really what you're talking about is trying to square away what that premium looks like. But at least having LME as my base, that's probably 25% higher than what I would be if I was selling a concentrate in the market. So I can at least know that I'm going to get to that point quite comfortably. And then it's sort of just arguing about the sulfate premium. Now, in the scoping study, we use 50 cents per pound. Right now it's probably closer to $1.50 per pound. It's, this is the nature of what we're dealing with. And I think, that in all likelihood, that premium is going to continue to exist, particularly in projects like this. And I think, but coming back to your point about the emissions, it's not so much on that side of it. I think it's the investors that are driving, the conversation about, where you look, your ESG credentials. We always knew that this project would be low emissions, but, we've done a bit of work with Scan in London, and, that's proven that, from where we sit, yes, we're comparing ourselves to existing operations, but when you look at what it is, you got your NPI at one end, you got your ferro-nickels there, you've got your HPAL there, you've got your sulfide projects there, and then you've got Centaurus Jaguar Project, right down here, and we're likely to be sort of top 5% from an emissions perspective. And I think that is going to be favourable in the long run because people are wanting to get sulfides, but they're also looking at where you sit in that sort of category.
I totally. I mean, again, it's a conversation we have every week on the Battery Metals show, which is, we've discussed, carbon credits, carbon taxes. How do you as a company eke out those margins? Can you charge premiums? What are the premiums for certain products? And those things are important to understand. And, that's why I was intrigued by, in your presentation, you spent a bit of time talking about it. So there's some advantage there. But it would seem that North America would be the most likely, or I know you point to Europe as well, but North America would seem the most likely destination. Yeah,
look, I think both of them. I mean, you're seeing the investment that's been made, Volkswagen, BMW, everyone's sort of going down that path. I mean, I think the European side of things is going to be just as strong as what you're seeing in North America. Maybe the North American markets are going to be stronger from an equity perspective, but I think being in that northern part of Brazil, we're well located to all of those markets in any event. I think, Jaguar's got a number of attributes going for it that put us in a pretty good position going forward.
Yeah, on that front, I think that's true. Well, look, Darren, appreciate you coming in today and just helping us kind of get a helicopter view of the project. I do hope you come back and maybe start talking about how that drilling is going, because I think the thing I'd like to see from you guys is I know it's 13 years life of mine, and that's great. But if you can drive that and build that and grow that you suddenly become, genuinely world-class project, because the grades are good, the margins are good, and you've done a great job up until now. So, stay in touch. Let us know how you get on, okay?
Yeah, thanks, Matt. I guess, we'll look forward to getting back in touch, but I guess walking away today, if we can just leave a few things with your listeners to bear in mind. We've got a very active exploration campaign underway at the moment, 7 rigs, diamond rigs, 1 more coming. We've got the dollars to do it. We've got a big resource. I think that people will really start to see this project as for the scale that it is. And, hopefully when I come back on next, we can go into a bit more detail around that.